Okay. Welcome back to Closing Bell West Africa. I'm Wale Famrewa. Coming up on this segment of the show, we'll be speaking to Sam Ocheo, Regional Head of Trading West Africa at Stanbic IBTC, and he'll give us an update on the fixed income market. We'll also be looking at the equity space as well. Tara Durotoye, CEO and founder of House of Tara, will be discussing small businesses in Nigeria. And Kadi Fadika Koulibaly will be giving us an update on the BRVM. We welcome your comments, so do email us at closingbell@abn360.com. But first of all, these are your headlines. Nigeria said it plans to issue 75 billion naira in local bonds with maturities between 5 and 10 years at its regular auction on October 17. The debt office said it would sell 15 billion naira of 5-year paper and 30 billion naira a piece of 7-year and 10-year paper, with terms to maturity of 4 years and 6 months, 6 years and 8 months, and 9 years and 3 months, respectively. Oil major Royal Dutch Shell will defend its environmental record in the Niger Delta as it faces a lawsuit that may set a precedent for damage claims related to activities of international companies. The lawsuit seeks to make Shell and other corporations responsible for pollution resulting from 3 oil spills in 2004, 2005, and 2007. Shell says the pollution was caused by oil thieves and that it has played its part in cleaning up. Niger has warned French nuclear giant Areva against any further delays to its empowering uranium mining project, saying it could support a company that is unable to meet its commitments. The mine is meant to boost Niger's uranium output and make it the world's second largest exporter of the nuclear fuel. But the planned startup of production was delayed to 2013 or 2014 from 2012 after 7 Areva workers were kidnapped in Niger's north 2 years ago. Niger Mines Minister Omar Hamidou Tichana did not specify what action Niger might take against Areva if it failed to live up to the government's expectations. A court in Ghana has upheld the detention of an Argentine naval vessel seized under a court order by creditors pursuing the South American nation over its 2002 debt default. Argentina declared a sovereign default a year ago and now faces lawsuits in the U.S. by bondholders, seeking state asset freezes to recover the value of defaulted bonds. The Libertad, a Navy frigate, was detained in Ghana's east port of Tema on October 2 under a court order sought by NML Capital, an affiliate of investment firm Elliott Management. Egypt will launch a scheme to cut the fuel subsidy bill that is a quarter of its budget towards the end of this year. Local Development Minister Ahmed Abedin said the government had started printing the coupons for subsidized gas, with which it hopes to better target the subsidiaries of people who need them ahead of the introduction of smart cards. The government had previously targeted mid-October for the introduction of the coupon, the first stage in a broader reform of energy subsidies. Analysts say measures to reduce energy subsidies are certain to be unpopular among many Egyptians, some of whom joined the uprising last year because of economic grievances. Those were your headlines making news across Africa right now. And let's move to the Nigerian market. Of course, we've seen the NSE rally recently. It extended those rallies today. Today was up well over 1%, closing at 27,006 points. Actually, no, it's not 27,006 points. That was actually yesterday's figure, but it did close higher today. And of course, the naira also steady at 157 naira and some change. And of course, we'll be getting a little more about the FX market as we cross to Sam Ocheo. He's the regional head of trading at Stanbic IBTC. Sam, it's great to have you on the show today. And maybe we can just start with the FX market. We're seeing some relative stability for the naira recently. What is your take on what is driving this?
The naira has been very stable in recent times, hovering around the 157 level. That all started with the monetary policy stance of the Central Bank of Nigeria. You will recall at the MPC meeting before the last, there was a tightening process in which the cash reserve ratio was increased by 400 basis points, and the NOP of banks cut down. Since then, we've seen stability in exchange rate, and then this has been buoyed by the amount of offshore flows that has been coming into the country. We've seen a lot of portfolio investors in the country occasioned by the inclusion of Nigeria in the JP Morgan Emerging Market Index, and because of that, we've seen reduced demand, or significantly reduced demand at the W-DAS window. With all the supply and demand, I mean, enough supply meeting with the demands in the system, it's only natural that you have stability in exchange rate, and then we'll see some appreciation also in this stability.
We see, of course, the flows into the market from the foreign investors has slowed down recently, but your thoughts on the demand side of the equation? How much demand are we seeing for FX right now? It does suggest to me that there might be a slowdown as well. Would you agree?
Well, I think there's a slowdown in the demand also, especially if you recall, with all the stuff on the subsidy side in terms of oil subsidy. Oil demand for FX used to be a very major part of the demand of the FX in this economy. But with all the audits and everything going on in that industry, we've seen significantly reduced demand from the FX window. So from a demand side, I think it's also reduced significantly.
Well, let's move on to the bond market. Of course, since the introduction of Nigeria to that JP Morgan Emerging Market Bond Index, the bond market has taken off. Can you just give us an update across the curve today? What kind of activity are we seeing?
Well, I mean, last week and this week, we've seen significantly reduced activity in the fixed income space. There's been slowdown from the offshore investors in terms of coming into the country. One of the major reasons for that this week will be the whole traction being given to South Africa in the emerging market world. Yeah. Most of the foreign investors have concentrated on South Africa because there have been serious depreciation on that currency. So there's been no concentration on Nigeria at the moment. And some of them are becoming risk averse because they feel there might be a contagion effect of what is happening in South Africa to other African countries. So there's been slowdown from these portfolio investors. And if you notice, you'll see that there's been upward rise in yield since the beginning of the week. But I think that is beginning to take shape now. We are beginning to see them coming in gradually, but nothing compared to what it was in towards September or September end.
Right, of course, we did see the budget presented by President Goodluck Jonathan yesterday. Clearly, one key takeaway for the markets is that there's a reduction in the deficit, at least relative to GDP. The borrowing is also expected to reduce going into next year. What are your thoughts on how the bond market may play into next year, given that budget presentation?
Well, the first instance, one will say reduced deficit means reduced borrowing. Reduced borrowing means drop in yield. But again, I don't want to say that might follow through. It's not as simple as it sounds. One, you need to understand what the monetary policy stance of the central bank would be for next year. Well, I would expect that the fixed income market would reduce in yield in one hand, because if you look at the inflation trajectory or the inflation projection, you will see that we should be going into single digit towards the end of this year, and probably 10 towards even 6% towards mid next year. So with that, you will expect that a lot of the supply, there's going to be a lot of demand for Nigerian yield, which is in double digit at the moment. And if the supply is going to be reduced, then that is going to really force yields down.
Okay, let's talk a bit about what we're expecting closer to, much closer now. We, of course, have the DMO auctioning bonds next week. Your expectations for that auction, and where do you think yields will be at? Of course, they're issuing, I think they're issuing about 3 bonds.
Well, if you look at where yields are today, it's hovering between 13.66 and 13.86, hovering from the 10-year down to the 5-year maturities. On the 5-year front, it's just going to be offering about 15 billion, which honestly is nothing compared to the kind of demand you might see there. And there's also much liquidity going into the 22s, either from local or from the offshore investors. That seems to be one part of the curve that has attracted a lot of liquidity based on the duration risk. I think Nigeria is still a very good risk for any of these people, any of the offshore investors to hold. At the end of this month, they're going to be increasing our weighting of the JP Morgan index from 0.24 to about 0.46, which will further ensure that you see more investors coming into the country. We have a stable currency. Inflation is reducing. We have attractive yield. So if you ask me, I think this auction is going to be hugely oversubscribed, and current market yield are good, attractive levels for any of the foreign investors.
Well, I guess this auction is coming at a good time for Nigeria. Of course, oil prices are well over $110 per barrel. But of course, I think the central bank tends to remind us that we're probably benefiting from the uncertainty we're seeing in the Middle East and frictions there. Oil prices, many people suggest, could actually fall quite sharply going into next year. Do you share that view as well? Do you think that the currency stability that we're seeing right now is something that we shouldn't get too excited about?
Well, the currency stability right now is occasioned by the offshore flows. I just think the central bank is tracking the flows, and as well, they will also plan their cash flow whenever you see this outflow. But like I alluded to earlier, we have a stable currency, we have attractive yield, the political risk is reducing, we have our reserves is also increasing, the oil price will also benefit significantly above benchmark. That is a lot of positive for Nigeria, and that will always bring more people, and that invariably will help in increasing our reserves. If we have good buffer for the rainy day, then I think we'll see the currency be stable for a while.
All right, let's leave it there. Sam, thanks so much for joining us today. Hopefully you've had a profitable trading day. Sam Ocheo is Regional Head of Trading at Stanbic IBTC. When we come back, we take a look at small businesses in Nigeria. Joining us in the studio is Tara Durotoye, CEO of House of Tara. So do stay with us for that.
Is like being on a journey. You know where you want to go, but you don't always know the best way to get there. One thing's for sure, it's never easy. On any journey, you need the right partner who takes the time to understand where you come from, where you're headed, and what it takes to get there. A partner who will walk with you no matter what. That's why I'm with Nedbank. They know it's not just me and my business on this journey. It's also my employees, my business partners, my family, and my community. There's still a great deal I wish to achieve, and I'm confident with Nedbank I can reach my goals.
Make things happen. Nedbank.
This week on Captains of Industry, we speak to Norbert Sase, CEO of Growth Point Properties. I actually made a little note to myself, and I wanted to call you the dealer. Would that be an accurate description of the career that you have had so far?
Doing deals, being involved with deals is part of what I really enjoy.
Yeah.
And so, yeah, it's probably quite apt.
That's Captains of Industry every Thursday evening at 8:30 p.m. Central African Time.
Out of the ordinary insights. Brought to you by Investex Specialist Bank.
And as we continue our focus on small businesses today, we speak to Tara Durotoye. She's the CEO